So no quicker way to retire than the Nvidia dividend. Yeah, today is all about getting in the weeds and starting to understand some of these key stock measures. I'd rather not be early and miss some of the growth rather than I want to know if the company is going to hit the number or not, and I go in there and my stock crashes 10% on me because I got in early.
Alex, how you doing?
Doing great. How are you doing, James?
Doing great. Good to see you. Ready to talk stocks and more?
We're here. Let's do it.
Awesome. All right. Well, this episode, building off of season 1 from the investor mindset, we want to deep dive a little bit of the KPIs or key performance indicators and metrics that often are reported about a publicly traded stock. A lot of information typically when you look at that data. So we'd love to have you walk us through some of those data points and identify what's important, what's more important, and what some of the information means.
Absolutely. Yeah. Today is all about getting in the weeds and starting to understand some of these key stock measures, because these are really important before you press any buy button. That I go through all of these and have a really good understanding before I buy.
That's right, because we talked about not only having the right mindset of the long-term investing approach, but doing your research, having a correct budget. So that's what we want to cover today. So typically when you go to either one of your brokerage websites or apps, or even just Googling company information, you're going to find some of these stats, if you will.
Yes.
So we'll share on the screen as well what we're talking about, but we'd like to have you walk us through some of those stats specifically. So we're going to pull up an information sheet related to the company Nvidia.
Yes.
Correct? So what we're looking at here is some of the key statistics of Nvidia. So walk us through maybe starting about what are we looking at here?
Yes. So important to keep in mind, this is not every stat under the sun. There's a million measures that you can go out there and find. What we're looking at today are kind of the more common ones and probably some of the more important ones. So important to keep that in mind. So starting off with some of the key stats here. On the left side, I have open, day high, day low, previous close. So these four are all about the latest stock price. So you can see that Nvidia opened the market on this day at 170. The highest point it hit was almost at 171. It fell all the way down to 167.01. And the prior day, it actually closed at 171.24. So what you can see here, Nvidia actually dropped $1.24 overnight before the market opened on this day. So it's kind of some interesting information that you can notice right there.
Right. I was just going to call out that these are dollars, and this is in relation to one share, right?
Yes.
Okay.
This is for the stock price of one. Yes.
Perfect.
And then the final one here is the 10-day average volume. And this is where numbers start getting really crazy when you think about how many shares are exchanging hands. So this number is for the 10-day average is 181 million shares of Nvidia that are being bought and sold. So the reason why volume is important is when major events happen, more shares get traded. And when more shares get traded, the change in stock price is even more meaningful than when volume is really low. So this is why volume is important.
So it could be good or bad, depending on what the volume is doing. If it's high volume.
Exactly. This isn't telling us the direction. It's just meaning that there's tons of shares being traded. This could be mostly down, which would result in the price to go down, or it could be mostly up, which would result in the stock price to go up.
And for that transaction to happen, there's literally somebody willing to sell and then somebody willing to buy, correct?
Exactly. So it is a one from one. I'm out there finding somebody that's willing to buy at a certain price, and then I'm finding somebody that's willing to sell at that certain price.
Maybe a dumb question, but is there ever a scenario where you have a whole bunch of people willing to sell, but nobody wants to buy?
What happens is if you go in and we're kind of getting into the weeds here on pricing, but if you go into there's going to be an ask price and bid price whenever I go and look at a stock. And nowadays technology makes it so the average trader doesn't really do this. You just go press the buy button and it's usually a market order at whatever the market is priced at. But I can go out there and see what are people wanting to sell at and what are people wanting to buy at. And there usually is a little bit of a gap.
Okay.
And what happens is eventually, if I want to sell my stock, I have to lower what I'm asking so then I can actually sell it.
Okay, cool. Continue.
So next we'll go into the 52-week measures. And you can see high and low. And it corresponds with a certain date. So you can see NVIDIA's 52-week high is $212. This was all the way back in October of 2025. And then at the same time, their low was 86.62 back in April of 2025. So really wild to see the journey that the biggest company on the planet has gone in a little bit over a year. I went from $86 all the way to $212. So that $86, when I'm looking back in time, was a fantastic buy point because even now we're at $170. I will have basically doubled my money off that low point. And this is all within basically a year. Pretty crazy.
Would you say this range that NVIDIA is showcasing here is abnormal?
So this leads into the next measure here of beta. And the beta here at 2.34, this is showing relative to the stock market, how much does this stock move? So for every dollar the market, or for every point that the market changes, NVIDIA moves over twice that. So to your question, this range is actually much wider than we would expect the average stock to be moving. And it makes sense, right? AI trade has been super volatile. Technology in general is more volatile. So when the beta is higher, it means that if I buy the stock, I just have to accept that I'm going to be getting way more range in the price.
All right, thank you.
So moving on to the right, we start getting into how is the company valued. So market cap at 4.071 trillion. This is how much the market is saying NVIDIA is valued at. And it's pretty crazy to see that we are in trillions of dollars. So we do have companies that are way above 1 trillion now. There are several of them. NVIDIA is the largest. And at one point, they were floating right around 5. So you can see that they've actually pulled back quite a bit in that time period. The next one is shares out. You can see 24.3 billion shares. This is the amount of shares publicly available to trade. It's a lot, right? Most consumers and most investors, you might have a few shares of NVIDIA. And if you think about, you are just a very small fraction of the much larger pie that's out there.
And is the company deciding how many shares that are out there, or how's that determined?
Basically, the company has to offer up shares in order for them to become publicly available. Generally, companies of NVIDIA size do not need to do this because there's already so many shares available. When I'm a small company and my company has grown over time, I may decide if my stock price is really high to offer more shares to the public to make them more available. The danger here is more shares being available makes the old shares less valuable. So if I'm out there offering a bunch of shares, the stock price is going to go down. And I can start getting really upset investors if I keep doing this. You see a lot of the hyper growth companies that try to get away with this, and they usually get complaints from investors when you do this. And then the final piece of the key stats here is the dividend. So NVIDIA has a very small dividend. It's 0.02%, and it pays 4 cents for every share that you own. And they pay out on an annual basis.
So they're saying here that if you own 1 share, every year they'll give you 4 cents.
That's right. So no quicker way to retire than the NVIDIA dividend. But everyone knows that I'm not really investing in NVIDIA because of the dividend.
Right.
And we've actually been hearing news that they might be putting more money to increase their dividend. But during times like this with the war, the stocks that are paying larger dividends are going to be outperforming. Because think of it as like guaranteed money. When I buy that buy button, I'm borderline guaranteed to pay out my dividend. Now, companies can cut their dividend and say we can't afford to pay this, and this is always catastrophic to the stock when this happens. But sometimes when businesses are really bad and they have a high dividend, they can't pay it. But you can basically think of it as almost guaranteed money when I press the buy button.
And is that typically budgeted, or is that coming out of profit? How is the allocation for that assigned?
So it really comes down to the CEO and the leaders and the board of the company of how they want to reward shareholders. And oftentimes, a dividend is just one way to reward shareholders. Other ways to reward shareholders could be buybacks. So a stock could have buybacks, or a company could have buybacks. And what this means is I can allocate money of my profit to buy back my own shares. So Nvidia starts owning more of their company again. What this does is it helps drive the price up because there's fewer shares available on the market. It's exactly the opposite of what I just talked about. Of offering more, you can actually buy them back. So long story short, it's really up to the company and their leadership of how they want to reward investors, and dividends are just one way to do that.
What's one of the higher dividends you've seen?
I mean, there's some crazy ones out there for utilities and oil. I mean, you can get 8 or 10%
Wow.
out there.
Okay.
But those stocks usually don't grow much.
Right.
They're going to be flat to down. So I'm entirely relying on that dividend. So when I look at an Nvidia, and you could see if I bought at 86 and got to 212, I've over doubled my money. Those stocks that have the huge dividends, it's going to take them forever to actually double your money in.
Okay. Cool.
Great. So now let's move on to the ratios and profitability section. And so we'll start on the left side again with EPS. And this is earnings per share. So again, it's thinking about how much money is the company making versus the amount of shares that are available. And this is one of the most common measures that's out there when analysts are looking at a stock. I will have revenue projections, and I will also have earnings per share projections. And the reason why earnings per share is important is because it shows how much money the company is making. So if EPS is going up, the company's getting more profitable and they're doing a better job with their selling. So it's a really important one. The next one is price to earnings ratio. You can see that there's also a forward price to earnings ratio. Price to earnings is really looking at the stock price versus those earnings. And what it's doing here is taking of what is the multiple that I'm paying off of how much Nvidia is earning. And right now it's at 34.2. So the reason why it's different than forward price to earnings is forward price to earnings looks at their growth over the next 12 months. And when I have a hyper growth stock like Nvidia, forward price to earnings is way more important than the current price to earnings. And this is why the number drops so much. Nvidia is growing so quickly that they're able to continue to get more profitable and their earnings continue to go up to up. And this allows me to think about, okay, if I'm purchasing Nvidia, paying 34 times their earnings feels really expensive. But if I think about their future growth, I'm actually only paying 20 times, which is really good when you think about that versus the rest of the market.
Yeah, that's interesting.
And so when we looked at different companies and see how they trade, a Palantir, for example, could be hundreds of multiple versus it. But then there's other companies out there that could be 10 or less if people don't view them as a very much of a growth company. So it can really vary quite a bit. The next one to talk through is revenue. And again, this is just what is their top line dollars. You can see that they've made 216 billion here. So again, they've just grown their revenue so much over time. ROE stands for return on equity. And basically, this is how much profit is generated per shareholder. So you can see that that ratio is actually above 100%. They're actually making more profit per shareholder because their revenue has gone up so much. This one isn't used too much. Really, revenue is the key one. And then the next one we look at is EBITDA. And EBITDA is basically the net earnings. When I take out all of the costs that the company has to go through, this is the net amount that I'm making. And when I'm looking at that, it's 134 billion. So you can see on $216 billion of sales, Nvidia is making 134 billion. It's an incredible amount of money. And This allows me to start calculating the measures that are here on the right. So looking at gross margin. So whenever Nvidia sells their product, they are making 71% of each dollar back. This is incredible. For a company Nvidia's size, in the scale at which they are selling, 71% is almost unheard of at this level. And then next is net margin. So when I take out all of my operating expenses, like paying employees, whatever, paying out my dividend, it then drops it to 56%, which is still an amazing number. And ultimately, the final thing here is debt to equity. And debt to equity ratio is at 5.4%. So basically, how much debt does Nvidia have versus the assets that they own? You can see this is only 5%. They're a very highly cash flow, high profitability company. They don't really need debt because they make so much money. So if I'm about to invest in Nvidia, I'm not taking that big of a risk that they're going to go bankrupt anytime soon. Where if you saw a company that had maybe 20, 30, 40% debt to equity ratio, it means they're borrowing a lot of money. And when I'm in the startup phase, I have to borrow money to get everything kickstarted. In the case of Nvidia, they're extremely established, large company. It's something I don't really have to worry about.
You know, what's interesting is you walk us through all of this and looking at what I would say is very amazing performance by a company, but then you look at the stock price right now and what it's done recently. Granted, we have a lot of geopolitics going on. We have the Iran war, or the war in Iran. It's, for me, it's almost confusing. Like, why is the stock doing so bad, yet the company is doing so well? So it's not always one-to-one when you're looking at some of these things versus the trend of what's happening recently with the stock price. Is that fair?
Yes, and I mean, this is why it's important to know these measures, because these measures help you identify a healthy company. And if I see Nvidia's stock dropping because of all the factors you just talked about, I know it's not because the company is having a problem. It's because there's other factors. And when I have a good company being impacted by other factors, that starts turning on my buy signal of, is this an opportunity to buy? Because I can assure you, back in April of 2025, when that stock dropped to $86, there was nothing wrong with the company. There was other factors like tariffs at play. That turned out to be a really good opportunity. So maybe now is a great opportunity. We have lots of turmoil going on, like you mentioned, but I can assure you it's nothing wrong with Nvidia, basically.
Have you ever seen the inverse where a company looks terrible on paper, but the stock is doing well?
There are so many companies that are in that hyper growth phase that when I look at earnings per share and they're negative, they're not making money. That you can look at their debt to equity ratio, it's super high. I can look at the revenue and it's not that much. And when I start looking at hyper growth companies, people are betting on the future. I think Palantir is a great example of this. Palantir is very overvalued versus their current earnings, but they are growing triple digits. And so investors are betting over time, these measures will catch up to their value. But this makes it a scary buy as well, because if I look at the company as is right now, it kind of throws off an alarm of like, wait a second, this company is very expensive versus their important stock measures. Another one is Tesla. If I go look at Tesla's numbers, it's not going to look nearly as good as this, because I'm really betting on Elon Musk and I'm betting on the future of Tesla with robots, not their current car business and not their current numbers. So it really, as a stockholder and an investor, I have to decide, am I willing to take those bets?
Yeah, thank you for sharing. All right, we got a last section here to walk us through this.
Yeah, so finally, wrapping this all up, these are important events that happen within the stock. So in the bottom left, you can see when is the next big earnings event. Earnings events are obviously the most important thing that happens with any stock. The next one for Nvidia is on May 20th. So if you're a stockholder for Nvidia, make sure to mark your calendar for May 20th.
Pausing for a sec, why is that important, the earnings event?
So the earnings event is where all of the numbers that we've shared here get refreshed.
Okay.
And so I find out what is their earnings per share. How is their margin looking? How is the revenue doing in the current quarter? they also will share how do we look in the future. So how is my forward PE going to be impacted by the growth that we expect to be coming? And that's when all the analysts will get on the call and update all of their numbers and update all their projections, and it has a major impact on the stock price.
That's fair. Okay, so that's starting to connect some dots for me, because you often hear or see a stock drop and then you hear the news that they didn't meet their projections this past quarter. So the quarter prior, they said, here's what we're thinking we're going to do.
Yep.
And then when the report time comes at the earnings event, they say, we exceeded, we hit it, or we missed it, and that can impact their stock price.
That's right.
Right.
Yeah, exactly. So whenever I'm at these pages, I always want to know when is the next earnings. Or if I'm looking at a new stock, I can see when their last earnings was. Or it may have just happened. And I'm like, why is the stock going all over the place? It might have, or all over the place. It might be because they just had earnings.
You feel like, or for whatever reason, it might be good to buy before because, you're optimistic that they've done well and the report card's going to come out and it's going to be, A plus. And so you want to get in before that report card, or it could be something, okay, I don't want to invest till that earnings call comes so we hear how they're doing, right? Can you use it in that manner?
I'd rather not be early and miss some of the growth rather than I want to know if the company is going to hit the number or not, and I go in there and my stock crashes 10% on me because I got in early. I prefer them to tell me what's going on and me to react to it rather than me trying to beat and get ahead. And like we talk about, I prefer passive investing. Now, granted, there's always opportunities in the market for you to buy and sell. Whenever there's earnings, I kind of want to just sit on the sidelines and wait and see because you never know what's going to happen. Nvidia just had the most incredible earnings this quarter and they dropped after it. So even when they put up good results, good forward looking, sometimes the stock still drops from there. So it's really volatile moments to keep in mind.
Thanks for sharing.
Yeah. And the final part to talk through is the ex-dividend date. So what this is, if I have a stock that pays a dividend, this is the date I have to own the stock by in order to get paid out the dividend.
Oh.
And in the case of Nvidia, I don't really care because the dividend is so small.
Right.
But if I'm in one of those stocks, like I mentioned, that's like doing an 8 and 10%, this ex-dividend date is huge. And what's interesting is, depending on how big the dividend is, you may see the stock fluctuate right around that percentage as it's about to get paid out. Because it's almost free money at that point. When it's guaranteed to get paid out at that date, if I'm owning that, it's like an instant couple of percent sometimes to there. And then on the right, you can see this is the amount that I'm going to get paid out times the amount of shares that I own. And that kind of wraps up the key stock measures to pay attention to.
Couple questions. What are the ones you gravitate to? You open it up. What are you looking at right away? What are the most important ones?
So they kind of work in tandem.
Okay.
But the ones that I like to really look at, for one is, I'm always interested in 52-week high. That's always one that I like to pay attention to. I like knowing when the last one happened, and sometimes if it's hitting one recently. If I'm seeing 52-week highs recently, that stock probably has pretty good momentum, and it's probably going to keep picking up a little bit. If it's been a long time since it's been there, and if anything, if there's been distance built, that stock might be in a slump, and you can see since October, Nvidia has been in kind of a slump. So that tells me a lot right there. The next thing I like to look at is price earnings and forward price to earnings. The forward price to earnings is extremely important for growth stocks and is one of the big things I like to look into. I want to invest in companies that are making good profit and are becoming less expensive over time. So when I see that the forward PE is dropping so much, I know that I'm dealing with a growth company that I'm interested in. I think those are probably some of the two most important ones that I immediately gravitate to. But again, each of these kind of work together and tell the full story.
Now, when you say growth stock or company, what does that specifically mean versus some other non-growth stock?
Right. So growth versus value is kind of like the terminology that you hear thrown around. Growth stocks are generally companies where the profit that they're making, they're reinvesting back into their business on a regular basis. Their goal is to continue to grow. And those stocks generally grow their stock price more and don't have dividends or have very small dividends like Nvidia does. Value stocks are stocks where they're not growing as much, they're not growing the revenue nearly as quick as a growth company. They're using their money more to return it to shareholders through dividends and other ways to reward the shareholder. You're going to get more kind of guaranteed money with the dividend in those, but the stock price doesn't go up as much. So as an investor, I have to make a decision. Do I want to make a bet on companies that I think the stock price is going to go up a lot? Or do I want to make a bet on companies that have more guaranteed revenue and I have guaranteed ways to get my money back?
That's great. Looking at this seems, it's a lot of information, but it doesn't necessarily, it just seems general company performance information. Are there ever scenarios where you need to look at industry specific metrics? For instance, let's say you're looking at a tech company that's got some tech KPI that may be, a consumer company like Walmart or something doesn't have because it's not playing in the same sector or industry. Or does that not happen?
There are definitely certain measures that are specific to certain industries that will not be part of like the general stock measures that you should be paying attention to. So for example, the cloud companies, their top line revenue of a Microsoft or an Amazon is really important for the company. But analysts and investors focus on how much is their cloud growth. So cloud growth will be very unique to them,
Right.
but that'll be the most important measure that drives that stock price, right? So there are different ways to look at all the different stocks, and there's different measures to pay attention to depending on the industry.
That's fair. That's fair. So obviously this is very helpful for somebody researching a company to decide that they want to invest in as part of that research process. Is this helpful? And I imagine it can be ongoing once you own it.
Absolutely. This is something that you should stay on top of.
Okay.
When I'm building my routine of I've owned the stock now, knowing these measures should be part of what I do within my routine.
Okay.
You know, we're going to talk about sectors, and we've talked about sectors. I also need to be knowing the sector information that is going into and what my stock plays into as well. I need to be aware of all of this stuff because this all affects my money and it affects the stock price.
Well, I appreciate you sharing all this for the listeners, and I just encourage any listener or viewer to like and subscribe to see our next informative conversation with Alex, talking stocks and more. So thank you for sharing. Any final words here about stock measures?
No, I think that we're really getting in the weeds now, and it feels like a lot. And I encourage people to really just go in there and take it one day at a time, and it comes with time.
I love it. I feel like I'm back in school now, and start calling you Professor. Well, Professor Alex.
We'll see what degree I get.
No, I get. You already got the degree, but Thank you for talking stocks.
Sounds good. We'll talk to you soon.
Talk soon.